Okay, welcome back, everybody, to Budget with Me. My name is Josh. Quick disclaimer, I'm not a financial advisor, but I wanted to talk about velocity banking again in this video. The main thing about velocity banking is we're not going to use loans. We can't use a loan to do any of this. We need a line of credit. A credit card is a line of credit, essentially. It's just not as easy to use as an actual line of credit, such as a personal line of credit. Some banks might call that a PLOC, or you can get a HELOC, a home equity line of credit, if you have a home, a mortgage. But, I would caution on getting a HELOC because you're using your house as an ATM. I would caution on that until you have a set budget in place and you have a plan. You don't want to go willy-nilly and getting a HELOC and then having something like 25 grand or 35 grand or something available to you and then not know what to do with it. So that's what these videos are for, is to try to help you get a plan going. And I'm showing you the way I do it, because if you can get into the velocity banking mindset, you can boost your cash flow every month from this to something around this. In this scenario here, this is all made up numbers, okay? But you're going to use this as a construct to make your budget. So let me say that again. We can't use a loan. Why is that? This person already messed up, depending on how you look at it. I say messed up because now they're trying to do velocity banking in this scenario. So they've messed up by taking this personal loan. Why is it a problem? Because this $500 that they owe to the loan company every month, as soon as they pay that $500, it's gone. You can't use the $500 again. Now it's paid into the principal balance to bring this down, minus the interest to, let's say, 25,800 or something, right? What happens if they have an emergency this month and they say, oh, I need $100 because I had a tire go flat? Can they call the loan company and ask for $100 back of the $500 payment they made? No, the loan company would say, no, that's your contractual payment on this loan. And sorry, but we'll see you again next month for another 500. So if you have a credit card or a line of credit, you can make that payment and then you can turn right around and charge that money right back for an emergency if you needed to. The whole goal of velocity banking here is to get out of debt and to eliminate all your debts. Eventually what would happen is you would have multiple lines of credit with nothing charged on them. You would just have tons of lines of credit that you had available, because it's good to have money available if you needed it. Banks are not going to write you a loan, or they're not going to lend you money on a line of credit if you need it. So it's better to get out of debt and have a plan and pay things off. And then as you've paid things off and you don't need the line of credit, that's when you go and get it. Let's talk real quick about credit score. One quick way to boost your credit score, if you're trying to get from maybe let's say you're in the 600s and you really need to get up to 680 because you're trying to qualify for that HELOC, that home equity line of credit. All these payments that you're making monthly here, the credit card and the personal loan, and most people have probably more than one credit card. So you have multiple card payments going out each month, or a department store, or Home Depot or whatever. I don't recommend getting department store cards because you can't use them everywhere. But boosting the credit score, you're going to take these payments that you make to the credit card of $400 and you're going to break it up into 4 different payments at least. So you're going to pay $100 every week or every 5 days, rather than paying just the $400 payment. The credit card company, they want you to only pay the one payment during your billing cycle because they can charge you on the interest that you had on that balance the entire time. If you are making multiple payments throughout the month, they have to reset the calculation, and it changes your average daily balance. So you'll end up paying less interest, but they will have to report more often to the credit bureau about your payment activity and how much your account's revolving. And the banks like that. Credit scoring is a game. That's why it's called a credit score, because you're just playing the game. The more you use the account and the more you make payments back in, the better. In this velocity banking scenario, we're using the credit card for all of these expenses in yellow. So if you want to do the baby payment and you just have this one credit card, then when you go to get gas this month, let's say, you went to get gas for $40 or something, turn around and pay the $40 right back the next day out of your checking account, because you're going to make this $600 payment, as part of your cash flow appear anyway. You don't have to wait till the month end and pay the $2,600 all at once. You can break it up and just pay it all into the credit card 4 different times. Divide this $2,600 by 4 and pay it 4 payments if you want. The more activity that goes into the card, that's going to quickly boost your credit score. And remember, I'm not a financial advisor. It's just something I've proven on my own. And I've also seen other people talk about it on videos, and it works. So if you can get to a 680, then that should qualify you just about at any bank for a home equity line of credit. And then the other piece of that would be, what's your payoff on the house and how much equity is in the house that you can use. But because you're offering your house as collateral, you're going to get more of an available balance to use than you would with a personal line of credit. So you'll have a bigger shovel, I guess. So I'm going to do one more video after this one and talk about the shovel. But thanks for watching. Please like and subscribe. Let's get this thing going. Take care.